Hey, hope you're having a great day so far. Today's January 25th, Monday, and on this post, I'll be telling you about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, before diving into Kyber network and the graph KNC and GRTUSD and see what exactly are going on in these two markets since the last time I've spoken. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on these markets according to what I'm seeing on the charts. Before I begin today, if you guys are watching me on YouTube, do subscribe. If you guys are watching me on TradingView, do follow me, as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys do want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 4 free stocks as of today upon a successful sign up and a qualifying deposit of $100 and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor and this is not financial advice. I'm purely sharing my own speculation opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below, but I'll try my best to get to as many of them as possible. Now see what exactly is going on in the markets first. Most importantly, I do take a look into Bitcoin dominance. Tells me where the money could be trading into. Would it be Bitcoin, altcoins, or neither? Currently, I am focusing on the higher time frames, again, on the Bitcoin dominance chart. Right now, it does seem like the daily time frame, we are getting supported by the daily 200 MA right here. However, on the 3-day, it does seem like we have breached the 50 MA on the 3-day time frame, but it's retesting right now. So I do like to see that this 3-day candle to either get rejected at this fib level right here, which is at about 64.25%, and then continue downwards and break this 50 MA again. On the weekly time frame, the weekly candle close yesterday, I did see that the price action here has also breached the 50 and 21 MA right here. Right now it is retesting it. However, this weekly candle does not close for another 6 days, but this is still something I'm keeping an eye out on because if Bitcoin dominance continues downwards, I would expect better price action in the altcoin markets, generally speaking, as opposed to if Bitcoin dominance changes course and goes back up. Let's take a look into Bitcoin price action here. Not much has really been done since yesterday. However, the price action has gone all the way to almost the daily 21 MA. It does seem like it's getting rejected by this top trend line of this falling wedge pattern. So this falling wedge pattern does seem valid for now. Falling wedges, like I said, 68% chance of it breaking upwards. Verify that stat on your own. If it actually does break upwards by tomorrow now, I will still get a measured target over 47K as far as I can read it here. Measured targets are theoretical targets only. It may actually be different in real life price action. So like I said, daily 21 MA is still the key resistance. Key support level here is still the daily 50 MA. We do have some smaller moving averages that's in between the current price action and the daily 50 MA, but this is still the key support I'm looking at, because if the price action actually breaks below this daily 50 MA right here, like I said, the next key support I'll be looking at would be the 3-day 21 MA now, which is currently about 27.4K. So quite a bit of a drop from here if the daily 50 MA does not hold. And if Bitcoin price action actually dumps, needless to mention, that would affect the altcoin markets, as we have already seen earlier today. I will point it out in some of my analysis on KNC and GRT in just a little bit. But when Bitcoin price action dumps, this could affect the altcoin markets, and the magnitude of that effect will depend on if Bitcoin dominance is trending upwards or downwards. Let's look at KNCUSD very quickly. So, like I said, let's just point out on the hourly time frame that since about today, about 14 o'clock, we are seeing quite a bit of a dump here from about 13 to 14 o'clock, which is the starting point of this dump. refer back to Bitcoin price action. Here you can pretty much see the same dump here. So this is what I'm saying, and I don't think this is a coincidence. When Bitcoin price action dumps, altcoins dump with it most of the time. Now let's go back to KNC right here and take a look on a higher time frame and see what exactly could be going on. On the weekly time frame, we're okay. I don't see that we are in overbought territory, nor do I see possible bearish divergences. On the 3-day time frame, I think we are okay as well. No overbought nor bearish divergence scenarios. On daily, however, quite a bit of bearish divergence right here. Let's start comparing highs right here. This high, that's bearish divergence number 1. And then finally again, double. Slightly higher highs, so maybe that would negate those 2 bearish divergence scenarios right there. However, comparing this high again with this high, so quite a bit of bearish divergence there, shows me that the bulls are actually running out of momentum here, at least so far. Now let's take a look onto the 12-hour time frame, where I do see a more rising wedge that is more clearly shown here. Here we go. All right, rising wedges are bearish patterns, generally speaking. 60% chance of it breaking downwards. Verify that stat on your own. The measured target here, if it actually does break downwards by about February 4th, just for convenience sake, then I will have a measured target of about $1.04 almost. That is basically the distance from the opening of the pattern and then deducting it from the expected breakout point, which in this case would be February 4th, just for an estimate. Obviously, if it actually does break out sooner, then the measured target would be lower. Now, let's take a look into the bullish and bearish case scenarios here. Bullish case scenario. If the price action here actually makes a higher high and negate possible bearish divergence right here, so beating an RSI reading of about 66 while making a higher high, this would tell me that the momentum is picking back up again. However, it does have to break out of this rising wedge pattern in order for me to completely invalidate this bearish pattern right here. So let's just take hypothetically for one case that could happen here. If the price action actually breaks about $1.55 to be safe, this would tell me if actually it does break $1.55 by tomorrow, January 26th, this will invalidate this pattern, will also make a higher high, obviously, and negate possible bearish divergence on the RSI. So I would really just have to calibrate what date this breakout could be, but I'm looking for a break above this upward trend line. So it really depends on the date the price action breaks out of this upward trend line here. Okay, so let's say, for example, by tomorrow, I'm looking for a break above about $1.53. So I would say $1.55 to be safe, to actually say that we have broken out of this rising wedge pattern. Now that is the bullish case scenario. First of all, make a higher high, and then get a higher RSI reading of upwards of 66, more than 66 on the RSI reading here. Second would be, if the bullish price action continues, breaks out of this rising wedge pattern, which is the upward trend line, so we really have to extrapolate the price depending on the date and the point in the upward trend line, just depending on the date of the breakout, of the estimated breakout. So that is the bullish case scenario. Bearish case scenario here, if price action starts breaking down, the key support I am looking at right now, since we had bearish divergence on the daily time frame, would be the daily 21 MA, because whenever I do see bearish divergence on a specific time frame, my conservative estimate is that it's going to fall back to the next closest moving average. In this case, would be the daily 21 MA right here, currently about $1.20. Okay, if the price action breaks this daily 21 MA, let's see if what the next support would be. I would say right off the bat here would be the daily 200 MA. So it doesn't seem like I would have to completely invalidate this rising wedge pattern yet. So there could be still some support that I can actually adjust my bottom trend line for. So even if it actually breaks the daily 21 MA, I don't think it's going to completely break down because we still have the daily 200 right here. So that's basically it, because the 3-day moving averages are also like pretty all the way down here, so I don't think they're going to act as supports. The 12-hour 50 could be acting as support, so daily 21 will be key support number 1. Daily 200 will be key support number 2. And then 12-hour 50 will be the third one there. So I don't think I will have to invalidate this rising wedge pattern just because it breaks the bottom trend line just yet. So those are going to be the bearish case scenarios for Kyber network. Let's take a look into GRTUSD and see what exactly has gone on since the last time I've spoken. Since the last time we have spoken, I think I mentioned the time frame I was looking at was the 4-hour time frame, which I did see a falling wedge pattern that was more apparent. The breakout, the measured target of that falling wedge pattern was about 58 cents. You can check out my last video for reference. And the price action has broken out of that falling wedge pattern, met the measured target and some more, went up to about 59, almost 60 cents. Before, right now, I do see a possible double top scenario, okay? Double top patterns or bearish patterns. Let's take a look into seeing what the neckline of this pattern could be. So I think the consensus of candle touches here would be about 52.5 cents. Measure target. Would be about 45.5 cents. So basically the next fib level right here will be the measure target. Right now I do see some possible some candle closes on the 4-hour time frame already. Let's take a look into the 6-hour time frame and see if we had any candle closes here. So no candle closes here on the 6-hour time frame yet. We have about 2 more hours until this candle closes. Let's see if the 6-hour candle close can actually get supported at about the 54-55 cent area. If that does, then that is still a good sign that this double top pattern may actually not be breaking, okay? So this is what I'm looking at. Let's take a look into some of the higher time frames and see the RSIs here and see if we have any overbought RSIs or possible bearish divergence scenarios. No, I think we're pretty clear on the RSIs. No overbought territory, nor do I see any possible bearish divergence scenarios. So this is what I'm looking at. Let's take a look into the bullish case scenario here. Bullish case scenario, if the price action can actually stay above this 54-55 cent fib level right here on the 6-hour time frame, this tells me that the candle closes from the 6-hour time frame on would not be breaking this fib level yet. That's a good sign. Staying away from this neckline, like I said, it's going to be about 50. Let me straighten this up real quick. This neckline is going to be about 52, slightly over 52 cents, okay? So 6-hour candle closes staying above the 54-55 cent area. That would be a good sign that this price action is going to stay away from this neckline right here and a possible breakdown. Some moving averages that are acting as support right now, the 6-hour 21. Immediate resistance is the 4-hour 50 and 21, along with the hourly moving averages right here. 12-hour 21 is coming up to be support, and that has not been touched yet, so I would expect that to be pretty good support, at least on the first touch. Okay, so I do see quite a bit of support underneath the neckline, right underneath the neckline right here. So that is still a good sign that this may not completely break down to the measured target here. Of course, I would like to see the interaction at each of these support levels and see what type of bounce it would get at these support levels before fully deciding if this is going to actually meet the measured target. Of course, we are still very well above the neckline right here, so not something just to be watching out for. That's the bullish case scenario. Keep 6-hour candle closes above this 54-55 cent area, which closes about 2 hours. I think that's a good sign to see. However, the bearish case scenario here, if the price action gets down to about the neckline, I would be a little bit more cautious. But there are still quite a bit of support beneath the neckline, including the 12-hour 21 MA. I do see that as pretty strong support, especially it has not been touched yet. That's still the bearish case scenario. If it actually breaks the neckline and continue towards its measured targets, breaking some of these supports that's right underneath the neckline. So these are going to be the supports I'm going to be watching out for. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know agreements, disagreements, feedback. I would like to hear them. Hope you manage your risk carefully. And if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.